Good morning, everyone. Welcome back to another video. In this video, we're going to discuss about Nifty structure. And let me tell you, we are in a very, very important time, crucial time. For me, if I told you the truth, it is the important time for me the entire year because this is the first time cycle dates are going to start. If you watch the time cycle video, I've told you clearly that from the Jan 13th to 16th, the first time period starts, and the major one is towards the month end, right? So this entire video, if let me challenge you, those who are watching this video, if you understand this entire video which I'm going to tell towards the end and till the end, if you watch it and you understand everything, you will be sorted till the month end. You have nothing to worry about. You will just wait for the structure to form and you can look for easy low risk setups. All right, what we are going to talk about is multiple scenarios, how the market will react in price. Next, we'll talk about time, right? This is our entire base of price and time. We don't talk about, OI analysis. We don't talk about FIDI, buying and selling figures. We don't really care about all extras because for us, everything is on the charts. All right. So let's begin. Let's begin with first a higher time frame analysis. So in the higher time frame analysis, let's quickly just zoom out here. Let me go to a daily chart. All right. So all those who have seen the portfolio 2025 video, the best time to invest, I hope this structure which is forming here is very good for you, those who are investors this year. And for me also, which what I prefer is in case market falls down 23,000, 23,200, 22,800, all those levels will be amazing for us, right? For investors. But how do we get there? The path, what path can the market take? This is what we're going to discuss right now. So recalling our correction, which we discussed, market is in a corrective state here. Right now, when there are multiple scenarios open, when there are multiple scenarios open, like for example, like I told you here, when this is a correction going on, in a correction, if it's a wave B, in the Elliot wave master course, I've repeated this many, many times. If you have seen it, if you've studied it, I've told you many, many times. So wave B is the most dangerous wave, this and your wave 4, right? These two are the most dangerous waves. Why? Because they can take the form of anything, almost all the waves, right? It can be anything. So with that in mind, looking at the structure here, if we are going for a irregular flat, this will cause a very, very strong reaction on the downside and it'll be very fast. First scenario, right? Keep this in mind. Irregular flat is your first scenario. Your second scenario, what if the wave B, which we are expecting, has already finished here? Has already finished and we are already in the next leg down. In this case, you cannot do anything in terms of prediction. Okay, prediction of waves, you cannot do that because this structure right now is completely diabolical. It's completely confusing. I'll explain it in a simpler manner when we go down to a smaller time frame. But for now, you must understand, if that is the case, if the wave has finished here, then you're in your A finished, your B finished, and then you're going for a C wave, or this is nothing but your W, X, and Y pattern, which will be your YA, YB, and YC. All right. So this is the next possibility, second possibility. Now, third possibility stands at the fact that what if the market suddenly does this? So all these possibilities I've discussed in the beginning of the year, and when we were trading, when the market started in the new year, I've discussed all these possibilities. And so far, it's been second week of Jan, and still the same possibilities exist. Nothing much has changed in a larger time frame. All right. What we are going to do right now, because we are approaching the time cycle date from 13th to 16th, right? This is the first time cycle zone. And what we do here is very simple. When a zone approaches, we wait and watch the previous trend before the time zone, the previous trend, what market is doing. Then here, either we'll get a reversal or a continuation in the pattern. That is what we want to see. All right. So this is what we're going to do. But to understand that, you have to understand what is happening here. Smaller time frame. Smaller time frame is very, very important for you to understand whether market is planning for a reversal or it is planning for continuation. So let's go down to a smaller time frame. Smaller time frame, let me just bring back all the drawings here. We have discussed this extensively. There is a new setup possible towards the Friday. If you have seen the Friday's video, I think it will be very clear for you. But again, just to recollect everything, Friday I gave you these levels in the morning. Since I was not well, I had to make a morning video because there was a possible chance of a reversal. In that case, I've told you that my preference will be if market bounces Friday and comes back down again on Monday, right? So the reversal, the real reversal, if it starts on Monday, that will be very, very good. So two patterns were discussed, and the second pattern was the ending diagonal pattern. Those remember ending diagonal pattern, low risk, high probability setup, where I've discussed it looked like a wedge pattern, right? It looks like a wedge pattern where all the waves become smaller, A, B, C, D, and E. All the waves, it becomes smaller and smaller. All right. What happened here was this fall which came, it came extra, a little bit thoda extra. What do I mean by extra is it did not respect this ending diagonal pattern. So there is another pattern which I have not discussed in the Elliot wave master course. Now, for the reason I'll tell you that there's another pattern which is the opposite of this. Okay. Which is the opposite. This is a contracting pattern, meaning all the waves are becoming smaller and smaller. What is the opposite of smaller and smaller? Larger and larger. So, first wave is the smallest. Next wave, this is the opposite wave. So, we don't count it. So, the next fall has to be bigger than the previous fall. Okay. This is the pattern C wave. So the next rise D has to be bigger than the previous rise B. Now the last fall, right? This is a last fall E should be bigger than wave C. How will the pattern look? It'll look like this. Okay. So this is why I have drawn this setup here. Now the truth about this pattern, why have I not discussed this in the Elliott wave master course? This pattern, the father of Elliott wave, R.N. Elliot discovered all these patterns, studied countless hours and years, and discovered all these patterns 100 years ago. All right, 100 years ago. And all these patterns, when he discovered, it's obvious. And in his book himself, he has not written about this pattern. He has not included this pattern. Obviously, there must be some good reason why he didn't do that. We don't know, obviously. Later in the future, maybe students or maybe those who are strictly following the R&D, Elliott Wave Institute, Elliott Wave principles, they have included this pattern saying, yes, it's possible that this is also forming in the market. Personal experience, I'll tell you my personal experiences whenever I study this or expect this pattern to form, 90%, 90%, it does not happen. Something else happens. So in my practice, what I do is I keep this in my mind. I don't forget about it. I keep it in my mind. This will be my last option. When everything else fails, only then I will look for this pattern if it's available. This is the last option. I hope this is very clear. Those who know where ending diagonal forms, it forms in wave 5 or wave C, right? Ending diagonal patterns when a wave ends completely. All right. So right now, if your wave 1, your wave 2, your wave 3 got over here, or your wave 3 got over here, and we made a start of wave 4. Give me 1 second. Yeah. So wave 4 from here, right? So the last leg, wave 5, this is your A, B, C, D, and E. Okay. So this is one of the possibilities. A, B, C, your D, and E. So what I want to confirm right now is wave D. This rise should be bigger than wave B. Let me just check if it's possible. If it is there, then we can confirm, yes, this is one of the possibilities. or else we will have to look for something else. This rise here is 231 points. The rise here is 251, so 252 points. So yes, this is a valid setup. One of the setups we'll keep in mind, okay, going forward. Now, we have not come to the time cycle part. We'll come to that. First, we're discussing price. One of the possibilities you understood. So Monday, if market falls down, it has to be bigger than this fall. If this pattern has to be valid, then the next fall must be bigger. So this is 383 points from this level. 383 points comes around 23,216. Okay, so I've marked 23,216 level. That is one of the possibilities. Next, one of the pattern completed. Now, I have not yet discussed the other patterns. I will do that. In meantime, what you must understand is the reason why we are discussing these patterns. The reason is I've told you already in the higher time frame is that if market is moving in any form of correction at this point in a sideways pattern, then market will look for a bounce. Okay, market will look for a bounce. The only issue I have right now for looking for a bottom, right? The only issue I have looking for a bottom is everywhere on social media, everywhere on social media, every guru, every retailer, small or big or whatever, every analyst, those who are gurus also, whatever they do is they are posting this date, 13th, everyone's posting. It's as if all the retailers know in advance that some sort of time cycle date is on 13th and everyone is looking for some sort of a bottom. Okay, and they all know that market is going to bounce, every single one. So this is what I call time inversions. When I explain this concept of time inversions, I told you time inversions happens. Mechanical reason for this is when retailers are in favor of the position, meaning suppose we are expecting a low, right? As per normal time cycle, if we're expecting a low to form, if retailers are already looking for a low, market will do the opposite. It will go for a high. It will make a high, right? This is what is called time inversion. If you want to know more about it, you should watch the time cycle video I posted. Very simple, guys. What I want you to do is we are going to go into next week without any bias. Okay. Without any bias, we are going to go into the next week. Simple. What we want to see Monday is whether market will go down, go back higher and make another low, or market will bounce from here and then come back. So what is the pattern which I'm expecting? What pattern? One of the two patterns. We want an N pattern. Remember that we want some N pattern. How? What kind of N pattern? First N pattern. Okay, first N pattern from this low. If market wants to go higher, go up. Okay, the N pattern will form if we get a corrective decline and then bounce higher. So this entire thing is the N pattern. Okay, like this, the red color. This is the N pattern I want. I have drawn the internal structure also. First scenario. Next scenario is market makes a new low. Let the market make a new low. All right. Let it make a new low. Go back up, go sideways or Poland flag, whatever, and then give us a breakout. Right. These are the two scenarios. Very simple. If market directly goes, so 13th to 16th is nearly 4 days, right? 13th to 16th is the crucial time. Don't keep any bias. The reason I've told you is because all retailers are already looking for a bottom on social media. Okay. They're already looking for a bottom on social media. Right now, you must understand that that is not the fact we must do when we approach a time zone. We want to go unbiased because of something called time inversions. All right. These are the two possibilities we are looking for. The major time cycle, the important one is at the end of the month. This is you can call it a semi-powerful or a smaller degree time cycle, which I've discussed already in the time cycle video. Next, This is one of the possibilities. So Friday, I gave you this two levels, two zones where market was already here at that time. This is where I discussed I want market to make some sort of a swing low. Some extra move came down here because of the volatility. This was a clear cut dump, and then market came back as a pump. Market does not respect levels when there is high degree of what do you mean? You see the difference. You can see the difference when I see a high degree of manipulation or volatility. You can see how this low was formed and how this low was formed. This was made slowly. This was made fast. So trap is here. This is not the trap. This is the trap. Fast movement, and this triggers SLs. This triggers limit orders, all that, and then in immediate change in direction, equal and opposite force, equal and opposite force. This is a dump and then immediate pump, same time, right? 3-4 candles down, 3-4 candles up. This is the timing also, not only price, time also matters. Right now, like I said, from this point, the second scenario, the first scenario discussed clearly that if we are making a expanding diagonal. Second scenario is if this was your irregular flat pattern, if this is your irregular flat pattern, and we start a fresh wave down as wave A, wave B, then wave C, wave D, wave E. This is nothing but your ending diagonal pattern. All right. So as long as, I'll just give you an overall idea, as long as price is near or above 23,100 level, 23,100. So this exact level is, let me just mark it. Some calculations again, yeah, 117 to 198. All right. 23,117 to 198. As long as if this market comes here, hits here by any chance, and then reverses, then I'll explain how I got this level. But right now, just try to understand that this is an important zone for many time frames, multiple time frame analysis. This is an important zone, and if market wants to bounce from here, it will be very good. What I'm looking for, again, because on social media there is so much traffic about low bottom and all time high. I'm not let's say very eager to find a bottom right now. If market does opposite, that's also fine for me. The only issue I have is market making a slow fall like this, slow fall like this till the month end. That is an issue for me because there is no structure at all. So in this rise, if you see at this point, market has made zero structure. It was just a blank rise, blank, total blank. Fall here was total blank. Here, irregular structures, irregular rise, no internal subwaves, nothing is clear. Straightforward move. All right. So that is why I told you in the starting, if the market has already finished the lower high, then we are most likely heading for 22,500, 600 level. So how do I get that level? Basically, it's just I draw Fibonacci, basic WXY pattern, WXY pattern, and then we are looking for 22,400 to 21,800. So this zone will be a possible achievable target. Path might not be straight. It can go like this. Okay, it can go like this, or else when what I'm talking about, the pullback, right? This pullback, it can come here also. Maybe this pullback is finished and market is slowly going down. It's up to the market how it goes right now. That's why I said don't keep any bias. So question is, how do we tackle this scenario at least till Wednesday? So till Wednesday, swing traders, and I'll give you the idea. I cannot tell you what to follow, what to do. I'll just give you an idea. If I am a swing trader, okay, if I am a swing trader, till Wednesday, I'm going to follow intraday levels. You understand what I'm trying to tell you? Something different. The swing traders till Wednesday, because we don't know from 13th to 16th, anytime we can get a swing. So till 15th, what you do, swing traders till 15th, what you need to do, follow intraday levels. Okay. Follow intraday levels. This is the plan I'm telling you. Intraday levels, follow the intraday levels. Use the intraday levels, the intraday setup, which we usually follow, the price and time setup. Use that to find a swing. Suppose, like for example, I'll tell you, using intraday levels, I found a swing in the market and I'm going for a short setup. This example I'm telling, short setup. I will carry overnight positions. So I will carry a swing position in case. Okay. I am using intraday positions, intraday levels to find a swing trade. Understood? All right. Obviously, SL and all that will be your my own choice and my own. What is that? In my demo account, I'll practice whatever I want to practice. I do not recommend trading in the live market. Now, intraday traders, as usual, very simple. You know what to do. Intraday levels you can follow it and practice in your demo account. Simple. Swing traders only must take note. Now, why till 15th? Question is why till 15 Jan? What is so different about 15 Jan? I'll tell you about that. Before I get there, I want to tell you something very important. Short side. Short if the market is going short. Okay. If the market is going short, so what did I tell so far? So far, I told you swing traders use intraday levels to find swing setups. Okay. Now, there are two setups, right? Long, short. On the short side, if you get a setup using intraday levels on the short side, I highly recommend it is smarter to exit it at the end of the day. So for short side, if the market gives setup next Monday, Tuesday, Wednesday, till 15th, right? Till 15th, if market gives short setup, everyone must become an intraday trader. Okay, intraday levels, follow that and use that for your demo account practice. Long, this I will plan to carry overnight. If I'm a swing trader, I will plan to carry overnight if I get a long setup. All right, as simple as that. Any new updates like long setup, no, you need to shift towards intraday, be careful. All that I'll put in the live Telegram group. Don't worry about it. Live updates will be given in the live market. Or else you can follow the daily videos I have posted in Tamil and in the group, in the YouTube channels. Now, before we get into 15th, the reason, this is your weekly levels, weekly setup. So last week, what happened? The first week of Jan was off. We started from 7th of Jan, right? So we had the 6th of Jan, first setup. Very simple. First hour, first setup. Simple. Nearly, how many points fall is that? Nearly 500 points. Yeah. So first week of sharing this analysis, 500 points. Swing traders, intra week. All right. So setup was very clear. Price came in the time zone. What did it do? It touched the level, right? It touched the level and we got what? A vibration level. First, our only setup is to find a vibration level. This is the price and time method, which I am giving for free. All right. I am giving for free the entire analysis and payment. See, this is a very sensitive topic for retail traders. I don't know why, but I'll explain it what you should pay for, what you should not pay for. This is again my opinion. You can do whatever you want, but again, my opinion. There are two things you can pay for. Payment, you can pay for analysis. Okay. You can pay for signals. Now, under this, there are so many categories like SEBI registered, SEBI unregistered, blah, 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 and all that. You guys know this is happening. This is a very common topic. Signal trading, those who give buy and sell calls, all that frauds and all that, this is a very public topic. Now, analysis, pay for only analysis. This is where I come. Okay, this is my underground traders group. This is where I come. I only share analysis. I don't tell buy, sell anything. Same thing. This analysis of price and time method I'm giving for free so that you can take some benefit. You have some setup. You have something when you go into the market tomorrow morning, you know what to practice, you know what to follow. You're doing something. It's not like blindly you're going, you're seeing everything outside the charts, meaning you're reading some headline, you're seeing some update. Morning at 7 o'clock they'll post, right, all the news apps, all the social media, the narrative is set, some Fed rate cut, some interest rate decision, something currency issue, all that. You'll think or see all that and go into the market for trading. No, I don't want that. I want you to have a separate setup for you to follow. I'm giving that for free so that you can practice something. Okay, so you don't go blindly into the market. Follow that, right? Remember these things, two things you can pay for as a retail trader. There's the last one is education. If you don't know anything and you really want to study something, you can pay for education, right? So these are the three things you must keep in mind. This is the most dangerous, signals, right? If you pay for signals, only God can save you, not even the guy who's giving you signals can save you. Only God can save. If he's God is okay with it, then he'll give you the best signal provider. If God is angry with you, he will not give you the best. He'll give you the worst. Anyway, that is a sensitive topic. That's why I said many retailers have faced such frauds already. Right now, I hope you understand how we find the weekly vibration level. Intraday vibration levels also the same. We have time zone. We wait for identification of vibration level, first step. After we find the vibration level, above that bullish setup we look for, below that bearish. So right now what happened, price came exactly touched one level in the exact time zone. So this level became our vibration level. So below this we want a short setup. So what happened, we got a good short setup so far, nearly 500 points. This is a intra week setup, those who are looking for one setup or two setup per week. All right, for next week, the time zone is 15th Jan, right? That is why I said till 15 Jan, follow intraday. So 15 Jan, what you must do is very simple. Here, time zone 3:15 p.m. So this is literally the last candle, right? This is literally why 3:15 p.m. sir. Why do we even care about the last candle? These are very small nuanced topics which maybe you will not understand, but keep in mind this is an important time zone. Okay, it starts from 3:15 p.m. Okay, 15 Jan 3:15 p.m. till next day morning 10 a.m. till next day morning 10 a.m. 16 Jan 10 a.m. All right. So basically, most preference we'll give to 16 Jan morning first hour. This is where we want to find the setup. All right. Now the catch, 15th evening. 15th evening is US CPI data. And again, markets will react, bond yields will react, Dixie will react, dollar index will react, emerging markets will react, so on and so forth. All right. We don't care. I'm telling you honestly, it does not matter what is the data. What matters is there will be volatility. All right. So this is exactly falling within our 13th to 16th time cycle zone. All right. If market decides to trigger some move from our zone, we have to be ready for that. So is it smarter to play aggressive till then, or is it smarter to play safe till then? Is your choice. All right. I'll leave you with this information, guys. I'll see you in another video. Intraday levels for Monday will be shared today evening or else tomorrow morning in the Telegram group. Make sure you're there. Make sure you join the group, and updates, any live market updates, like I told you, I will always share it in the live market via Telegram or else Twitter. Right now, so what you must practice, so I've told you, you must practice your Elliot Wave Master Course. Without this, it's no point, guys. No setup, no strategy, nothing will help you. Elliot Wave is the language of the markets. Once you understand that, you can graduate, you can move on in your own journey, you can learn something new, you can learn something else. But Elliot Wave is the start if you really want to learn how to look at the charts. All right. I'll see you in another video, guys. Till then, take care and have a very good and relaxing weekend. That is very important because next week is going to be mental torture for us, right? What we call as Bheja Fry. Anyway, take care, guys. See you.